Have you ever opened a stock chart and thought, I have no idea what I'm looking at? You're not alone. Charts can seem confusing at first, but with just a few steps, you can read them with confidence and make smarter investing decisions. I'm Barry, and in this video, I'll show you how to read stock charts like a boss, so you can start spotting trends and patterns for yourself. Stick with me, because this skill can truly change the way you see the market. The very first step in learning how to read stock charts is simply opening one. You do this with charting software, which collects all the price and volume data for you and presents it in a visual format. Personally, I recommend TradingView because it's free to start with, it's incredibly easy to use, and it's one of the fastest platforms out there. Once you open a chart, you'll see price plotted over time, and that becomes the foundation for everything else we do. Charts come in different forms, and choosing the right one is important. A very traditional option is the OHLC chart, which shows the open, high, low, and close for each trading period. These charts are useful, but they can sometimes feel a bit raw. Japanese candlestick charts, on the other hand, are far more popular among traders because they make price action patterns easier to see. Each candle has a body and shadows that tell you at a glance whether buyers or sellers were in control. Another option is the Heikin-Ashi chart, which smooths out daily volatility and makes trends far clearer. Our own testing shows that Heikin-Ashi actually outperforms many traditional methods when it comes to spotting longer-term trends. So while each type has its uses, I suggest beginners start with candlesticks and later experiment with Heikin-Ashi. Step 3. Choose a time frame. Every chart has a time frame, which simply means how much data each bar or candle represents. If you choose a 1-minute chart, each candle shows 1 minute of trading. If you select a daily chart, each candle represents a full day. Traders use short time frames for quick moves, while investors often prefer weekly or monthly charts to see the bigger picture. The key is that by switching between different time frames, you can compare short-term fluctuations with long-term trends and get a deeper understanding of the stock's behavior. Now we move on to one of the most powerful tools in chart reading, trend lines. A trend line is simply a straight line that connects either the highs or the lows on the chart. If the line slopes upwards, you're looking at an uptrend. If it slopes downwards, it's a downtrend. And if it moves sideways, the stock is consolidating. Knowing the trend is critical because trading in the direction of the trend greatly improves your chances of success. For example, if you buy a stock during a strong uptrend, the probabilities are on your side that it will continue to rise. Once you've mastered trend lines, the next step is learning to recognize patterns. Price patterns repeat themselves over time and often signal the next move in the stock. For example, an inverse head and shoulders pattern has been tested to have an 89% success rate in predicting a reversal from a downtrend to an uptrend. A double bottom has an 88% success rate with average gains of around 50%. These patterns sound complicated, but they become easier to recognize with practice. The good news is that platforms like TradingView and TrendSpider can automatically detect these patterns for you, saving you time and helping you learn faster. Indicators are mathematical calculations applied to price or volume data, and they help confirm what your eyes see on the chart. One of the simplest indicators is the moving average, which smooths out price fluctuations to reveal the underlying trend. Another useful one is the exponential moving average, which reacts more quickly to recent price changes. You also have momentum indicators like the rate of change, which measure how quickly prices are moving. The key here is not to overload your chart with too many indicators. Instead, pick 2 or 3 that work well together and use them to confirm your analysis. Finally, you bring it all together. By using trend lines, patterns, and indicators, you can make an educated estimate of where the stock might go next. Of course, no one can predict the future with 100% certainty, but this process gives you a structured way to make informed decisions. Combine your technical analysis with solid fundamentals like earnings growth and revenue strength, and you'll have a much stronger foundation for your trades and investments. If you want to try this for yourself, click the link in the description to access my exclusive partner discounts and free trials for TradingView, TrendSpider, and other top-rated platforms. Let's quickly recap. Reading stock charts might seem intimidating at first, but when you break it down into steps, it becomes very manageable. First, open a chart with reliable software. Second, select your chart type, with candlesticks or Heikin Ashi being excellent choices. Third, choose the time frame that fits your trading style. Fourth, draw trend lines to see the direction of the market. Fifth, recognize patterns that repeat themselves over time. Sixth, add indicators to confirm what you see. And finally, bring everything together to estimate the future direction of price. With practice, you'll soon be reading charts with confidence and making smarter trading decisions. If you found this video helpful, make sure to hit the like button and subscribe for more tutorials just like this one. Don't forget to check the description for exclusive partner discounts and free trials for the charting platforms I personally recommend. Thanks so much for watching, and I'll see you in the next video.